Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey, welcome back to Big Money Real Estate. I'm Elise Blank. Here's today's daily update. So yesterday, I was having a really interesting conversation with Jeff Ball, the CEO of private money lending firm Visio Financial Services. And we were talking about Visio's residential real estate investor report for 2015. And we covered a lot of information about the demographic of Visio's client services, how old they are, who they are, how much they make, what they're doing. And you can watch that video from yesterday, which is up online as well. But today I wanted to talk about some of the survey findings about investor intentions going forward and where you might gain some insight from learning what Jeff and his numbers are telling us. Jeff, welcome back to Big Money Real Estate.
Oh, thank you for having me.
Sure. So tell me a little bit about what your investors are planning to do over the next 6, 12, 18 months.
Yeah, so what our data currently shows is that investor demand and interest remains very strong. Nearly 50% of the respondents for our annual survey indicated they plan to buy 4 more properties in 2015.
Wow.
So yes, that's pretty similar to what we've seen over the last couple of years. So demand remains strong. We also see that investors are continuing to express an interest in being able to pursue a hybrid strategy of being able to both flip properties as well as build a rental portfolio.
I would have thought that those are two really different skills, the idea of renting something out or fixing and flipping. And it's interesting that investors are trying to balance both. Is that a tax issue, do you think, or an income issue, or there's some opportunities that they just want to get fast money out of and move on and buy more?
I think, Elise, that most investors see that there's a good opportunity to build wealth over time in owning real estate, and that then there's also an opportunity to generate short-term income through redeveloping and reselling properties. So I think having the flexibility to pursue both strategies is very important from an exit strategy, particularly as the market has become more competitive. It's not uncommon that an investor buys a property to flip it and then finds that they're going to go ahead and rent it based on what's changed in the marketplace in a relatively short period of time.
I heard from a listener to one of our shows, reached out to me in 2012, and at that time, Georgia resident, house was underwater and rental property was underwater, and so he thought he had a better chance of selling his personal residence, and then if he sold it and it was underwater, that he would then be able to have that tax write-off, or at least the taxes wouldn't come back to haunt him. So he, reached out and said, what did I think? And I said, I think you should move into your rental, and I think you should rent out your primary residence, and I think you should wait for the whole thing to settle. Mm-hmm. So he reached out to me yesterday to say that, sure enough, he said, I thought you'd like to know how it all worked out. And of course, I always want to know how it's going to work out. And it turns out that over the last 3 years, the increase of net worth of both properties has gone up over $120,000. So now both properties are out of the red. They're back into the black in terms of equity and well into the black. He's got a renter who's paying him really good money that more than covers all the expenses, and that's gone up dramatically every year because he happens to be in a good school district, and then went out and bought yet another property using some of the profits that he was now generating. And so 3 years ago, this was an owner who was totally in the red, looking to do 2 short sales or go into foreclosure, and 3 years later has $125,000 worth of equity and properties that are bringing in money and is living in his rental. Like, that's about as good as it gets, I think.
It's a great story, and the market is filled with lots of fun success stories. This business is really a great little window into the U.S. economy and how powerful the economy is in regenerating itself. And so it's fun to watch investors, be successful.
Now, a couple of the numbers that I thought were super interesting about going forward, you're seeing 1/3 of your investors searching for property outside their home states. And I know you said you're mostly kind of south and east. Where are they looking? There's not a lot of inventory out there. So where are they going to look for property?
Yeah, so in the Midwest and the Southeast, everybody's looking at Florida and to some extent Georgia and Texas. Florida still, is probably 2/3 of the way through its foreclosure
Yeah,
crisis,
they
and some of
still
that
have,
has to do with it's
yeah,
a judicial state, and
right.
so there's still a significant backlog of foreclosures in Florida. Those are the three states that I would say most people are looking if they're looking outside of their current state.
Interesting. And you also found that 20% of full-time investors, and that's such a tiny percentage of your, I think you said 4% of your pool are full-time investors. 100% of income comes from investment properties, but they need more high-quality employees and contractors to sustain their growth. Are they not finding the right people? Where do those people go?
Yeah, I think in some markets there's clearly a shortage of qualified tradespeople to perform a number of these functions. And that's one of the challenges with the housing market. It has gone up and down, whether it's new construction or existing home sales. They've gone up and down so dramatically that you have people coming in and out of the workforce. But it does create some issues for investors to find qualified tradespeople that they can count on to do quality work.
Yeah, so many trades went out of the industry over the last 7, 8, 9 years. And as a country, we're not really investing in the kind of growth and rebuilding efforts that I think would keep these people trained and working and able to do other kinds of jobs on the side. So if you're not rebuilding bridges, roads, and schools, right, those are all the trades that you need to build and maintain full-time real estate investments, especially when you're building planned unit developments, right?
Yes.
So, Jeff, thank you. This is incredibly insightful. Do you have the study up on your website?
We do, Elise. It's available for download for free, and so we would invite folks to visit our website and download that. And we appreciate any feedback that we get from folks.
Sounds good. Jeff Ball is the CEO of Visio Financial Services. Jeff, thanks for coming back, and we'd love to have you back again soon.
Thank you for having me, Elise. Have a wonderful day.
Hey, you too. And thank you for watching this episode of Big Money Real Estate. As always, you can send me your real estate investing questions on Twitter and Facebook. Please share this video around. Don't forget to watch part 1 from yesterday as well to get the other side of the story. And don't forget to check out my brand new series, The Intentional Investor, How to Be Wildly Successful in Real Estate. 9 ebooks, 9 videos, all in one package, and you can find it at the Wit Nation store or at thinklinkstore.com. See you next time. I'm Elise Glink.